Okay, let's talk about closing costs because this is one of those things that catches buyers completely off guard. You save up for your down payment, you get pre-approved, and you find your perfect house. And all of a sudden, there's a pile of all these other fees that you didn't know about. I'm gonna break down exactly what closing costs are and what you're paying for and exactly what you're going to need to budget for in Northeast Ohio. So first of all, what are closing costs? Closing costs are all the fees associated with finalizing your home purchase. It's not your down payment, that's separate. These are costs that are required for the services and paperwork required to actually transfer ownership of the property from the seller to you. And they add up fast. Here in Northeast Ohio, closing costs typically run anywhere from 2 to 4% of the purchase price. So if you're buying a $200,000 home, then you're looking at about $4,000 to $8,000 of closing costs on top of your down payment. So this is real money and you need to plan for it. So what are you actually paying for? Let me break it down. First, you've got lender fees. These are fees from your mortgage company to actually process the loan. Origination fee, document prep fee, underwriting fee. These can add up to 2% of your loan amount right there. Then you've got the appraisal fee. So we did talk about appraisal fees before, but that is gonna run you about $400 to $600. Then you've got the credit report. It's usually about $30 to $50, but it's there. Next is title insurance. This protects you and the lender if there are any issues with the property's title. Like if somebody comes out of nowhere and claims that they have rights to the property. Title insurance covers that. There's owner's title insurance and then there's lender's title insurance. And you're paying for both. In Ohio, this fee usually runs around $1,000 to $1,500, and it does depend on the purchase price. Then you've got escrow fees. The title company handles the closing and then they charge for that service, usually around $300 to $500. You've got recording fees. So that's what the county charges to record the deed and the mortgage. And it's usually a couple $100. And then you've also got prepaid costs. This is the stuff like homeowner's insurance. Your lender will require for you to have a full year of homeowner's insurance paid up front. And that's anywhere from $800 to $2,000, depending on your coverage. And property taxes. If you're closing mid-year, you may need to prepay county property taxes into your escrow account. Mortgage interest. If you close on the 15th, you're gonna prepay from the 15th to the end of the month. So your first payment isn't due until the following month. And then there's random smaller fees. HOA fees, if they charge, some HOAs charge a transfer fee, survey fees, these fees all add up. Now here's some good news. Some of these costs are negotiable. You can ask the seller to cover some or all of these closing costs through concessions. We talked about that in a previous video. You can also shop around for some services. Your lender or agent might give you a list of approved title companies. And some lenders offer no closing cost loans, where they roll the closing costs into your interest rate. You might have a slightly higher rate, but then you're not required to bring as much of money to the closing table. You don't need as much cash to close. That's an option if you're short on cash, but it costs you more over the life of the loan. Here's what most buyers don't realize. When the lender pre-approves you, you're focused on the loan amount, but they don't always spell out how much cash you need to close. So you might be pre-approved for a $250,000 loan with 5% down. That's $12,500 for the down payment. But then closing costs are another $6,000. So you actually need $18,500 in cash, not $12,500. And if you don't have it, you can't close. I've seen deals fall apart because buyers didn't know this or weren't prepared for this. And they scrambled at the last minute trying to come up with the money. So how do you prepare? First, ask your lender for a loan estimate. They're required to give you this within 3 days of applying for a mortgage. It breaks down all your estimated closing costs line by line. Second, factor closing costs into your savings plan. If you're saving for a down payment, add another 2 to 4%. Third, explore seller concessions. If you're stretching your budget, ask the seller to cover some of the closing costs or all of them. Fourth, consider a lower down payment loan. If you're doing a conventional loan, you could put as little as 3% down. FHA is 3.5%, and this frees up more cash for closing. Fifth, shop around. Get quotes. Get quotes from multiple lenders and compare. Compare not just interest rates, but closing costs too. Some lenders have lower fees than others. One more thing, a few days before closing, you'll get a closing disclosure. This is the final breakdown of all your costs. Review it carefully. Compare it to your original loan estimate. If there are big changes or unexpected fees, call your lender. You have the right to question anything that doesn't look right. Don't just show up at closing and sign blindly. Know what you're paying for. Bottom line, closing costs are real. Plan for them, ask questions about them, and don't let it catch you off guard. A good agent and a good lender will walk you through all of it so there's no surprises. That's what we do at the Realize team. We make sure that our buyers know every step of the way and what to expect. Follow us for more from your family in real estate. Love ya. Bye.